Hello everybody! We have some not bad things today, so good stuff. The goggles come off, and the first good word is expense account. Expense account. Expenses are money that we pay in the business, and account means a lump of money, like a bank account, that we can take from to pay the company expenses. So let's say I'm a salesperson selling our books. I could have an expense account of, I don't know, $5,000 a month, and I use that expense account for my car, the insurance on the car, gasoline, some meals, entertaining potential customers. These are all things that would come from the expense account. Salespeople often have expense accounts. Salespeople also have to keep track of how many miles or how far their car has driven. So if they're driving their car and they're going to see customers, they have to keep track of how many miles they drove the car for tax purposes, for dealing with the government. So when we keep track of how many miles or how far we've driven the car, we call that mileage logging. Mileage means miles, how far, and logging means to keep a log. In the old days, captains of ships used to have a log book, and they would write in how far they go, what happens, how big are the waves in the ocean, how's the wind. So nowadays we don't have the ships, we have cars, and we have to keep track of the mileage. So how far, keep track, is mileage logging. Okay? The third part of being a salesperson, for keeping track of how much money you spend, is to tell the accounting department, your reported expenses. Reported expenses. So reported means how much are we going to tell the government that we spent on the sales. Okay? So reported expenses would be everything from the car, the gasoline, entertaining customers, to printing brochures using photocopiers, and renting hotel space for presentations. These would all be part of the reported expenses.